Hello and welcome to the SCI video series to support the Accounting Foundations course. My name is Eric Andrews, and in this video we're going to be looking at the trial balance process. Let's start with a review of where we were in the last video. In the last video we were looking at basic business transactions and how to get those into our accounting system. We started by taking information that came from the transaction itself, in this case where Adam Johnson invested $50,000 to start the business. And we analyzed that with our T account system. We saw that if we deposited cash into our account, that was going to be done with a debit entry and increase the balance of cash. With the same time, we had to record the financial interest of the owner by increasing the balance of the owner's capital account. This, to do this properly, was done with a credit, and which is part of the way that the accounting equation is set up. We're going to see why this becomes important here in a little bit. Next, we took that information and we moved it into the general journal. Cash, being the debit entry, was the first column, the first row that we would fill out and enter the amount on the debit side, followed by the indented owner's capital entry, which showed us that this was going to be on the credit side. We did this a couple of times here, and we looked at how something like prepaid rent was an asset that we were going to increase the balance of, so it was a debit entry. And then cash, in this case, was a credit entry because we were paying our rent, and we at that point decreased the balance of our cash. By seeing that we have two different cash entries here, we can see one increase the balance with the debit entry, and the next decrease the balance with a credit entry. The whole goal here was to enter that information into the ledger, which is the living document where we always keep track of our balances. The debit entry of cash at the beginning there increased our balance by $50,000, and then when we paid that rent with the check, we decreased the balance by $9,000. So we had at that point a balance of $41,000. As we went through the month and finished the rest of the transactions that were on the sheet, what we ended up with was a balance on our debit side of $49,310. What we're going to do at this point is begin to move these accounts into what is called the trial balance worksheet. This trial balance worksheet allows us to look at each of the accounts and their balances and to see if we are in balance with all of the equation. This is something that you're going to do at the end of the month as part of your closing process, and it's going to help you check to see if the entries that you made during the month are accurate. So in this case, cash is going to come across with its balance of $49,310. Now, the setup of this particular worksheet is based upon the idea of what is called the chart of accounts. The chart of accounts is how we organize our accounts. The 100 to 199 category was for our assets. The 200s were for our liabilities, followed by the 300s for our owner's equity account. Then we had our income accounts or revenue accounts in the 400s, and our expenses in the 500s. So the organization of this worksheet is exactly the same as the chart of accounts. You have your asset accounts up top, and as you can see, those are debit balances because debits are normally assets are normally a debit balance, followed by your liability accounts, then your owner's equity accounts, your revenue accounts, and eventually your expense accounts. So the structure of this is laid out just like the equation, and the purpose for that is for us to check if they are in balance. In future videos, we're going to look at the adjustment process, which will be the next section of the worksheet, and finally coming up with what is called the adjusted trial balance. I hope this has been helpful. Thank you for watching, and I will see you in the next video.